All right. Hi, everyone. Welcome to the day 4 of the Synergy Traders number 54 event. This is your 2025 Profit Playbook. And this event is brought to you by TradeOutLoud.com and TimingResearch.com, along with our co-sponsors for this event, which include OptionProfessor.com, TradingIndicators.com, MadHedgeFundTrader.com, AlphaShark.com, BubbaTrading.com, AltaVest.com, TradesTrending.com, and LogicalSignals.com. So just a reminder, of course, that all these presentations are for educational purposes only. Trading is not suitable for all people, and please consult a financial advisor and only trade with money you can afford to lose. All of these sessions are being recorded individually and will be available on TimingResearch.com as soon as possible. Also on the Timing Research YouTube channel, Substack, and your favorite podcast app. So to open the day for us today, we have Stephen Primo here with ProTraderStrategies.com. And Stephen, I'm going to go ahead and turn it over to you.
Thank you very much, David, and thanks to everyone for taking time out of their morning here to join me today. I have a great educational presentation, and I'm going to actually reveal the entry rules to one of our best methods for trading volatile markets, and you'll be able to apply this as early as today if you'd like. So today I'm going to be talking about the perfect trading strategy for volatile markets. Now, I'd like to start off by sharing with you this older chart in IDXX. Someone looking at this would say, okay, we're obviously in an uptrend, higher highs, higher lows, right? But let's say at this point, maybe you go to that chat room, or maybe you just start to look at your indicators and you think, I think we maybe went up a little bit too quickly, too soon, and perhaps we're overbought. So if you're a more aggressive trader, you decide to exit your position if you're lucky enough to be long and then go short. But with the rules I'm going to be sharing with you today, on this very same bar that you would have thought it was overbought, you would have actually not sold at all. In fact, you would have been buying right there towards the high, and potentially you could have been able to capture another 62 points to the upside. So once again, you're going to learn the entry rules to this method, and this is what we call the perfect trading strategy for volatile markets. So everything you're seeing today is displayed on the PTS Primo charting platform. This is the platform I developed with Pro Trader Strategies with one goal in mind, and that was simply to teach you and to help you trade the markets. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. About 15 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders around the world. And I'm happy to say we have students in over 115 countries and in every state in the United States. Now, I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years, I was a specialist. If you're not familiar with what a specialist is or does, there aren't a lot of them around anymore. If you ever Google those pictures of the trading floors where these gentlemen were making these weird hand signals behind those large wooden podiums and lots of trading paper on the trading floor, those were specialists. They made markets in roughly about 50 or 60 stocks. So in the old days, before electronic trading and high-speed computers, if you wanted to, let's say, purchase a stock, you would call up your stockbroker, say, I want to purchase 100 shares of IBM, which is one of the stocks I used to make a market in. He, in turn, would call the floor broker. The floor broker would take the order to buy 100 shares of IBM and then walk up to the trader who specialized in making a market in that particular stock. So this is what I did. Roughly for 9 years, I was a specialist and made markets during the crash of 1987 and the bull market that followed. So in my 47 years of trading, I've seen and traded just about everything imaginable out there. I've traded through different market environments, straight up markets, straight down markets, sideways markets, and I've seen just about everything. Most likely, if it's a brand new method or system, it's most likely been around before. It's just been rebranded and edited a little bit. So in my time, nearly 5 decades of trading, I know what works in terms of consistency, and I know what doesn't work. So that's why I formulated Specialist Trading with Pro Trader Strategies with one goal in mind, once again, just to simply educate traders around the world to put the power back in their hands so that they can ultimately make their own trading decisions. And you'll see that attention to detail in today's educational class. Now, before I begin today, I'm required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular volatile strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, a lot of students say, well, Steve, how can I get education more on a daily basis? Well, feel free to follow us on Twitter or X if you'd like. Every day I post between 5 or 7 different snapshots of signals that our methods or techniques have generated. Also bits of financial wisdom to help you along the way. So there's lots of great free information, ways to get education on a daily basis. Please feel free to follow us on Twitter. You may want to copy down our handle right there. It's abbreviation for Specialist Trading at SPCLST. TRADG. Okay, let's begin today's educational presentation. And what we're going to be talking about today is strategy 3A. Okay, this is the method I'm going to teach you the entry rules too. Now, let me share with you some of the highlights. It's a continuation strategy. And what does that mean for those of you who are not familiar with that term? Well, continuation strategy looks for a trend to already be established. And it doesn't wait for a pullback or a sell-off to buy at lower levels. It looks for some type of confirmation that it's going to go higher. And so you simply jump on board because the trend has not ended yet. Okay, now the way it does this is by applying a unique Bollinger Band setting. Now this Bollinger Band setting is our proprietary setting. It's usually applied and used just for our students that have purchased Strategy 3A, but guess what? I'm going to share with you the proprietary setting today, so you'll be able to use it and format it to your liking. Now, it's designed to trade these quick, powerful trends in virtually any market, in any time frame, and in any direction. So one of the best things about Strategy 3A is that you don't have to change the rules or edit it or use another strategy if you like to trade multiple or different markets or different time frames. The same rules apply to all markets and all time frames in any direction. Now, we always require that our students learn the strategy first by paper trading. I know a lot of you, your eyes are going to light up today once I give you the entry rules and say, wow, this is amazing. I'm going to start trading with this afternoon. I would really suggest that you not do that because mostly students that jump in too quickly will fail and they'll have losing trades. And the main reason is not because the strategy is not, consistent. It's because you're not applying the rules correctly. You jumped in too quickly before actually paper trading or understanding the process. So please, paper trade first. Our edge at Specialist Trading is consistency. Now, I know a lot of you think consistency means, well, that means there's a lot of winning trades, right? Not really. That's not what the consistency actually means. Consistency is actually an awareness that you will have losses from time to time. But a consistent method is one that's able to recoup those losses, often on the very next trade. So that's what we mean by consistency, a 2 steps forward, 1 step back approach. And strategy 3A is very consistent. Okay, now let's give you a little refresher course on Bollinger Bands. I'm sure most people are aware of Bollinger Bands. Perhaps you're even applying them right now. Let me just give you a little refresher course for the people who aren't familiar about Bollinger Bands. Bollinger Bands have 3 settings or 3 different bands, okay? Now, the middle band is a moving average. It's just a simple moving average set at 20 periods. So it's a 20-period simple moving average. Now, above and below that 20-period moving average, you have the upper band and the lower band. Now, the deviation, meaning the distance, I'm not going to go into the inner workings of the Bollinger Bands, but basically the distance set for the upper and the lower band is the same. And it's usually set at +2 for the higher band and -2 for the lower band. So these are the standard settings on most practical trading platforms. And if you apply it to this generic chart, this is what it looks like. You see that middle red line is just a 20-period simple moving average. Here's the upper band set at a +2 deviation. Here is the lower band at a -2 deviation. So we're going to change things up a little bit. And as I said, we have a proprietary setting for Strategy 3A, usually reserved just for our students who have purchased Strategy 3A, but I'm going to give it to you today. All right, so here are the settings that we use for Strategy 3A. We're going to keep the moving average exactly the same at 20-period simple moving average. We're only going to alter and edit the band deviation. So we're going down from +2 for the upper band down to 0.382, okay? And the lower band was -2. We're going to -0.382. So we're going down to fractions, okay? So remember, the middle band, which is set at 20 period simple moving average, will stay the exact same. All you're doing is changing the upper and lower band deviation. Now, you should be, whatever platform you have, you should be able to do this. Just go into your edit box and change it. If you're not able to do that, contact your tech support or whatever trading platform you're using. They should be able to supply it to you, okay? So here's the standard setting using that generic chart once again. And now let's apply the proprietary setting. You see the difference? It's a lot smoother and it's more flowing like a river. This is what's going to help us with our entries. Now, I know a lot of students in the past have said, well, Steve, can I apply something else like moving average bands, or can I apply, let's say, Donchian channels or Keltner channels? Trust me, I've been trading this for decades, and I've experimented with a ton of different indicators and settings. By all means, feel free to experiment with any indicator and with any setting you'd like. But trust me, after experimenting myself for decades with this, I have come back to the conclusion that my mentors were right. This was the best setting, in my opinion. It gives the best results. So I wouldn't suggest applying other indicators or other ways to apply this if you don't, or if you're not able to set the Bollinger Bands to the proprietary settings. Okay, so now that you know the proprietary settings, let's look at the entry rules, and we'll look for buy rules, okay? Now, obviously, the sell rules will just be the exact same. We'll just be turning them upside down. But let's go through the signals now for buy setups. Okay, step one. Obviously, you want to plot the proprietary Bollinger Band setting on your chart. But the reason why this is step one is because, remember, it makes absolutely no difference what chart, what time frame. If you're an investor, maybe you want to use a weekly or a monthly chart. That's fine. If you're an intraday trader, you use a 5-minute chart or even a tick chart. Makes absolutely no difference, but always plot this proprietary Bollinger Band setting on your chart. And as you see here, there's an older chart of Tesla, just for educational purposes. We see here that it looks like we're going higher, right? And then we may even think that it's overbought. But the first thing we want to do is on our platform, we have it simple for you, because all you have to do is click on strategy 3A in our upper green strategy tab. And in the drop-down menu, click on indicator. And guess what? It's pre-formatted. So there's nothing you have to edit and change every single time you want to look at the indicator. It's already set for you, and there's nothing you have to do except click on indicator. Okay, so now we know what it looks like. That's the way it would look like as it's plotted on this older chart of Tesla. This brings us now to step two. We want to look to identify 5 consecutive price bars that close either on or above the highest Bollinger Band. Remember, on or above the highest Bollinger Band. Does not matter if it intersects those Bollinger Bands. All we're looking for is the close. The close of these 5 consecutive bars must be either on or above the highest Bollinger Band. So now if we look at this chart once again, well, we see, well, we're below the lowest Bollinger Band. Right here, we intersect it, but what do we have here? We closed above. In fact, we have a total of 1, 2, 3, 4, 5 closes above. Remember, it makes no difference if you intersect it. All we're concerned about is consecutive closes above. So this completes step number 2. Now, we go to step number 3. We're going to enter to buy when price trades. You notice I underline trades. It doesn't have to close, but when price trades 1 tick above bar number 5. So if the high of bar number 5 was 50, the minute on the next bar it traded at 50.01, well, that's your entry point, okay? So you can either place a stop there, or if you're in front of your computer, just buy at the market. It's up to you. But that's our entry point. It has to trade 1 tick above bar number 5. This is where students obviously initiate the strategy incorrectly. Well, they'll say, well, Steve, I bought it and it closed above bar number 5. We're not waiting for it to close. It just has to trade 1 tick above bar number 5. So we have our 5 consecutive bars. Here's bar number 5. So this is where we want to buy, 1 tick above. Now it has to trade there. Okay, it doesn't have to close above there. Many times you'll see it trade there and close lower. That's perfectly okay. So let's see what happened on a bar by bar basis. Well, it hasn't traded there yet, so we're still waiting. But here on the second bar, it did. So we would have entered right here. And look what happened. You could have potentially captured 115 points in the next week or so. Now, remember, in the course, we teach you exit points, we teach you stop placement, we teach you how to monitor and money manage the trade. But right now, I just can't give away everything for free. It wouldn't be fair to our students around the world who've purchased Strategy 3A, but you've got the entry point right now. Okay, so let me share with you some Strategy 3A examples. These are rather current. And on top of that, remember that everything you're seeing today is being displayed using our PTS Primo charting platform, where everything is just one click away. Okay, let's look at ODFL. This was coming into November this month. All right, once again, price had been going up rather sharply. At this point, most people say, well, gosh, time to start taking profits, or maybe I'm not going to buy this. It's gone up too quickly. You may think, once again, this is overbought. Let's say somebody on TV says, well, it's had a good run, but it's time to get out. But what's the first thing we do if we're trading Strategy 3A? On our platform, we make it simple. As you see here, 2 days went down lower, and you say to yourself, well, gosh, maybe I'm right. Maybe I should sell short. But on our platform, just click on Strategy 3A. In the drop-down menu, click on Indicator. And you'll see, well, gosh, we're still above the highest Bollinger Band. All right, here are the Bollinger Band settings. And we have 1, 2, 3, 4, 5 closes above. So this is actually where someone may say it's getting ready to go down. This is actually a buy setup. But once again, where most students fail is they say, okay, well, I see 5 closes above, I'll buy at the market, right? No, you have to wait for price to trade 1 tick above bar number 5 right here. So just because it has 5 consecutive closes does not mean you just enter it. You have to wait for an entry setup. And on the next bar, it did trade there. So you're long now. ODFL, you would have been long just about a couple of weeks ago. 28 points in just 3 days, okay? You see, what the beauty of Strategy 3A is it determines with high levels of consistency if there's still room left in the trend, regardless of which direction, an uptrend or a downtrend. And so right here, it wasn't telling you that it was overbought and that was running out of steam. It was actually telling you that there's more room to the upside. And so you captured that, all without the help of looking at any news or looking at any overbought, oversold indicators or support and resistance. Everything is in the price. Now, obviously, this gapped up, as you see here on the 6th. There was some news announcement or something happened, economically positive. But how did we know to enter it a full 3 days in advance? It's because this great strategy for capturing volatility was telling you in advance. Excuse me. Let's look at a opposite side of the coin here, a sell signal in BIIB. All right, someone looking at this, once again, who's not skilled in Strategy 3A would say, okay, well, there's Steve. I'm a big student of support and resistance, and I like to follow the institutional support. That's the big banks. Those are the guys that have the big money and the big institutions, and they're calling for major, major support here. Well, remember, when I was trading on the floor, some of the biggest losers I ever dealt with were the institutions and were the big banks, because they had lots of money, but they had a lot of money to play with and to risk. But I would never base any trade off of what they did. They have the worst consistency of any trades that I ever dealt with. So I was always happy to take their orders because I was usually able to, trade opposite it. Someone right here could say, all right, well, Steve, I don't know. I don't really believe you because support really works a lot. Well, okay, let's say you think there's support here. It looks like it's going to hold. But what do we tell our students? Click on Strategy 3A, click on Indicator. And well, you may think there's support, but for right now, we are below the lowest Bollinger Band. And now we count 1, 2, 3, 4, 5 closes below, okay? So what's this telling us? It's telling us that we can't sell at the market. We have to wait for price to trade 1 tick below. And you can say, but Steve, this is major, major support. Well, let's see how well that support held. You would have entered a couple of days later once it traded below. And what happened to the support? It fell 22 points coming into roughly last week, okay? So this is what we mean. This is not based on any of the traditional ways of trading because, once again, in my nearly 5 decades of trading, I know what works in terms of consistency and I know what doesn't. So we'll only teach students things that have high levels of consistency. Here's another example in TMUS, T-Mobile. Okay, look at all the up closes, and we now have a series of 5 closes above, and here's our entry point. So we would have entered right here on the next bar. It closed right there, but we didn't care about where it closed, just that it traded there. And look at that, 35 points coming into last week, okay? It captured that volatility. Now, when I was on the trading floor, most of the time, the volatility came at the year end. People were trying to settle up for tax purposes or to get positioned for the new year. So there may be a lot of volatility in the next couple of months. So this is a great method if you'd like to trade with it in the coming months. Let's look at CEG. Okay, price was originally above the highest Bollinger Band, but then at this point, we started intersecting, closing below the highest, then back above, then back below. But now what do we have? We have a series of 1, 2, 3, 4, 5. And someone could say, well, Steve, this didn't close below. Remember, all it needs to do is close on or below. Okay, so right here, we closed on the lowest Bollinger Band, so that counts as 1. And we have 2, 3, 4, 5 closes below. Here's our entry point. You would have gotten short the very next bar. If you wanted to purchase puts, if you wanted to purchase some type of spread strategy with a downward bias, it's up to you. We're not going to tell you you have to purchase this option series, you have to only go short stocks. It's up to you. Or if you don't want to actually short, well, then only trade the long signals. But if you wanted to go short, you could have entered here. This was at the end of October, just about a month ago. And look what happened. 38 points in the next 4 or 5 days. Once again, obviously some news came out on this stock or some announcement which caused it to gap down about 30 points. But isn't it funny how we knew in advance to go short? How did we know that? Because price was telling us. That's the beauty of strategy 3A. You don't have to overcomplicate things to be consistent. You just have to really simplify things and you'll be on that road much quicker. All right, here we have a setup in team. All right. Everything is going to the upside. 1, 2, 3, 4, 5 closes. This was in mid-October. You would have entered on the very next bar. And nothing much happened for the next 2 or 3 weeks. And someone could say, well, see, what happened to the volatility? There's absolutely no volatility. Well, you wouldn't have lost anything. Maybe at the worst, you would break even. But if you wanted to stay in this, that would have been highly suggested because at the beginning of this month, then look what happened. Once again, another gap up based off some news or event, and that's where the volatility kicked in. So the reason why I shared this example with you was because sometimes it takes a little time for the volatility to click in. And the point is, it will identify it before many times a news announcement, many times before some type of news comes out or some type of information. So that's the beauty of strategy 3A. Here's a sell example in CDW. 5 closes on or below the lowest Bollinger Band. Here's bar number 5. The next bar, we didn't do anything, but the very next bar we did. Once again, this is where students fail. Excuse me. Well, they'll say, but Steve, I sold and then it closed higher. So I exited because it looked like it was a bad trade. No, we teach you where the stop placement is, and you would not have been stopped out using our very standard stop placement. And look what happened. Stock fell 40 points coming into roughly last week. Another sell signal. This is in a 4-hour chart of the British pound. We know that not everyone trades just stocks. So let's look at an entirely different market, an entirely different time frame. Okay, 4-hour British pound. This was just actually last week, I believe, or a week ago. Same process. Nothing changes because we changed markets or time frame. We have 5 closes below the lowest Bollinger Band setting, okay? We traded on the next 4-hour bar. We traded below, so you would have been short the British pound. And if you were short, you could have potentially captured 260 pips in the next 3 or 4 days. That's roughly about $2,600 per unit. Now, a lot of our students, like as I said, they don't feel comfortable going short. They say to themselves, I don't know, it feels unnatural for me to be betting against something. And I understand that. Remember, we're just an educational company. We're not here to tell you how to trade. It's not systematic where we have a signal service each night telling you what to do, what to buy, what to sell. We don't believe in that. As an educator, our job is just simply to inform you high levels of consistency in different trading techniques and strategies. If you want to take them, it's entirely up to you. But we want you to have the power in your hands to decide. And so what a lot of students of ours do is they don't go short, but they actually use this as an exiting tool. So if let's say you're long the British pound, it's not working out. And if you see a strategy 3A sell signal, well, that's where you get out because if you were long, you would have saved yourself 260 pips to the downside. That would have been a rather large loss. Okay, let's look at this daily chart of the dollar yen. Okay, this is going back to October. This is where it's difficult to find out. Many times you'll see a kind of whipsaw market where it close in the realm of the Bollinger Bands, kind of up for 2 days, then back down below, then up a couple of days. So this is where it's whipsaw. But this is really what's great about Strategy 3A in our proprietary Bollinger Band setting is it's keeping you out of the market. In other words, we have to have as a requirement 5 consecutive closes either above or below. And if you don't get that, you're simply out of the market and you're missing all this whipsaw action. So that's one of the advantages of Strategy 3A. We're only going to enter once we see some type of trend being established. So nothing really has happened here until this point. All of a sudden it did take off and we have 1, 2, 3, 4, 5 closes, and you would have entered right here. Once again, this is the dollar yen on a daily time frame. Students who really haven't studied and paper traded the method would say, well, Steve, I bought it, but it closed below, so I already have a loss, so I exited with a loss. Nope, that's not the proper way to trade it. We teach you where to place your stop, and in this case, you would have still been in the trade. Or else someone would say, well, Steve, I didn't enter because it didn't close above bar number 5. Nope, that's not a requirement. Does not need to close above bar number 5. All it needs to do is just trade there. So this is a valid entry for Strategy 3A in the dollar yen. And look what happened. 740 pips coming into last week. That's over $7,000 per unit in roughly about a little over a month if you're trading this with the dollar yen. Okay, here's an example in Lulu. Same kind of chart where you have a really sustained, nice upward trend. The same process you would have entered right there in mid-October. And if you were still long coming into last week, potentially could have captured roughly about 60 points. Remember, we have different exit points for you in the course. We have different exits because a lot of our students like to get in and out of trades quickly. They don't want to hold their trade overnight. They don't like to keep capital tied up. So we teach you how to exit rather quickly. Still, other students will say, well, Steve, I want to squeeze as much profit as possible. We teach you how to do that as well. Now, the same process can be to the downside. Here's a chart in IDXX. As we see, we have a sell that was entered right at mid-October once again. And this time, you could have potentially captured 65 points to the downside. Once again, look how right here, which was at the end of October, the stock gapped down, probably off some news announcement or some information. We don't know because this is not based on any fundamental news. It's just based on price. So it really doesn't matter because back here, about 3 or 4 weeks earlier, we were already being told that we should be exiting or go short this. So that would have been a nice potential 65-point gain to the downside. Or if you were long, you could have saved yourself a 65-point loss. Now, here's an example in Netflix. This was in mid-October. Someone looking at this would say, well, Steve, this is going straight down. I can't trade this. I've got to short it, right? Well, first thing we want to do is see how it applies to the Bollinger Band setting. Now, in 2 days, we had a really nice run-up. So what happened to the short? But are we still going to do anything? Well, let's see what we would have thought. Because even though you thought it went up too quickly, once you apply the Bollinger Bands, well, what do we have here? 1, 2, 3, 4, 5 closes above. So where you thought that was overbought, this is actually setting up for a really nice buy signal. This was just about a month ago, okay, in Netflix. But remember, it is incorrect to simply buy at the close of bar number 5. A lot of students want to jump the gun and they say, hey, well, it's going to trade above. I'll just buy. No, I can't tell you how many times I've seen bar number 5 and then it goes the opposite direction. So we want to confirm it. We want to make sure it trades above bar number 5 if we're going long and trades below bar number 5 if we're going short. Now, in this case, we'll only buy if it trades there. So let's see what happened. Well, it did on the very next bar. Even though it closed lower, we are now long. We place our stop, and in the course, you would know where to exit and where you'd like to get out. It's up to you. But look what happened. Coming into last week, 85 points, okay, to the upside. This is something, it's too bad that I'm giving this presentation today because if I had given this presentation maybe a month or two ago, you could have taken advantage of something like this. But these setups and signals are happening all the time. I believe I found out too late today, but there was one that was a perfect setup in MSTR. If you were able to apply the Bollinger Bands to that this morning and look at the stock going back the last 2 or 3 weeks, you would have seen a perfect setup as well. Okay, let's look at REGN. Once again, this is an extremely expensive stock, $1,000, $1,100 stock. I'm not saying that anyone's actually going to trade something this expensive, but just to tell you that we can apply this to an intraday chart. We can apply it to currency pairs. We can also apply this to a very expensive stock. It makes no difference. I'm just sharing with you how this is easily transferable onto different environments. Now, someone once again looking at this would say, well, maybe we've bottomed out. It looks like we've stopped going lower, I should say. And this was a reversal, and look, there's buyers around here. It's just kind of going sideways. So I think we're bottoming out here. And that guy in that chat room says you got to buy this, or at least maybe buy some options in it, because it looks like it's stopped selling off and the sellers have left. All right, this is the way I used to trade some 5 decades ago on the trading floor when I first started, and how I couldn't make a dime my first year or two because there was no consistency in thinking that way. But trust me, I've been there before. I know how difficult it is and how depressing it is to use these things that are supposed to work, this traditional wisdom, and find out that it really doesn't work. Sure, maybe every once in a while you get a nice signal, but then you'll give it all back on the next one. So I never really look at anything being overbought, oversold, or the buyers coming in, or volume of that, because there's no consistency. It's too subjective. I just really look at the price. And if we apply strategy 3A, we made it simple on our platform. Just click on indicator. And where we think we've bottomed out, we are actually below the lowest Bollinger Band. So this is an environment to go short, not to go long. Now, does this mean we just sell at the market? No, we have to have structure. So we do our countdown, which is 5 right here, the first 5 consecutive closes. And this means that we can only go short if we trade below right here. That's it. So even though we've waited 1, 2, 3, 4, 5, 6, 7 days, that's okay. We're still waiting for it to trade here. Now, on the very next bar, it did. What happened to the bottoming out? So that's our confirmation to enter, or if we were long, to get out. And look what happened. 370 points coming into last week. Okay? So you see the power of strategy 3A and to catch these volatile markets. It's telling you in advance where most likely there's more volatility to continue. You just have to go through this process to make sure you're in sync with the requirements. Okay, so let's recap before I tell you about a great offer we have for all of you. Remember, this is a continuation method. Continuation method means that we're looking for the establishment of some type of trend, either to the upside or to the downside. And then when we see that it looks like it's going to continue, we jump on board and take advantage of the continued trend. The way it does this is by applying our unique Bollinger Band setting. You all have the setting right now. Remember, just to recap, I believe this is being recorded, so you can go back to the recording and watch again. But just to recap really quickly, we're going to keep the Bollinger Band middle band, which is a 20-period simple moving average, the same. Keep it at 20. Now, the upper and the lower deviation is usually set default at +2 and -2. What we're doing is going down to fractions. We're going down to, on the upper band, to plus 0.382 and the lower band to negative 0.382. Now, all this is automatically set for you and formatted on our platform. All you have to do is click it on and it's right there. Remember, you can apply strategy 3A to virtually any market, any time frame, and any direction. I showed you expensive stocks, inexpensive stocks. I showed you currency pair, 4-hour bars, and daily stocks. So it doesn't matter what market or time frame. You can even apply this. We have a number of students that trade this with crypto. All right. But now that you know the entry rules, please, the one caveat is paper trade first. You cannot just simply jump in. I can almost guarantee you, if you jump in too quickly, you're going to lose. And not because it's an invalid signal, because you're not implementing the rules correctly. You're looking at things and saying, well, Steve, it was 5 bars above, so I bought, right? No, you didn't use the entry rule, which is to above the bar number 5 or below bar number 5. So remember, just watch the video again and really study it so that you have a full understanding of the process. Our edge with not only strategy 3A, but with all of our methods is consistency. And remember, consistency is awareness of losses. This will produce losses from time to time, but with proper money management, stop placement, we feel that its consistency will be able to override that, because oftentimes you'll have a 2 steps forward, 1 step back approach, okay? So ask yourself, do you think this strategy can help your trading for the remainder of 2024? We only have about a month left. How would you like to start off 2025 with this method, or even better edges that we have in store for you? Well, let me tell you about a great special offer for all of you attending today, the 2025 Profit Playbook seminar. We're going to offer you what we call our Trading Floor Edges course. This is a 10-video course which includes over 47 years of trading experience, tips, techniques, and methods that I have accumulated in my nearly 5 decades that we have in a 10-video course, okay? More high probability trading edges, things that I didn't discuss today. 2 techniques that will elevate your trading. How to be in sync with the overall trend, all right? 3 steps to a successful trade. How to fine-tune your entries, next level exiting techniques. And remember, you can apply all of this to any market and any time frame. But here's one of the best things. We're going to give you a superior candlestick trading edge. I think most of you, if you're not already, have applied trading with candlesticks. Many of you are using them right now, or some of you have learned about them. But candlesticks are a very popular way of trading. We have a great trading edge, a great way to apply them that is different from the non-traditional way of applying candlesticks. Let me show you an example right here. Here's an example in PLTR. This was just last month. Now, the way candlesticks usually work in a traditional basis is they are reversal type of signals. So if you're in an uptrend, you're looking for a trend reversal pattern. If you're in a downtrend, you're looking for a trend reversal pattern. So as you can see, we are in a uptrend. So therefore, we would be looking for some type of candlestick approach that would tell us to sell or to exit. And what do we have right here? We have one of the most bearish candle patterns. That's called a bearish engulfing pattern. So what most students who just trade the traditional way of candlesticks would say, I've got to sell here because this means we've most likely topped out, time to get out of the trade, so I'll sell. And so this is why, in our opinion, most traders fail while using candlesticks, because there's not a lot of consistency in the traditional way of applying them. But here's what we're going to teach you in this 10-video course. This super candlestick trading edge would have told you not to actually sell here at all. In fact, it would have generated right here a buy signal, the bar before it, and you could have potentially captured that nice long move there in the next week to the upside. So this is the superior candlestick trading edge that you'll learn in this course, okay? Remember, this is a 10-video course which includes over 47 years of trading experience, things that I've accumulated from my days mainly on the trading floor that you won't find anywhere else on any other platform in any other course. So this usually costs close to $1,000. There's so much information jam-packed in there. It's extremely powerful information. It's being advertised on the Pro Trader Strategies website close to $1,000. But here's what we're going to do for all the people attending the 2025 Profit Playbook webinar today. We're going to discount that tremendously down to $19 only. I mean, that is unbelievable. And let me really just warn you, this is for a limited time only, because we're not going to keep it for $19 only, because it really should be selling for close to $1,000. This is a 10-video course, yours to keep. This is not something that disintegrates after 6 months and you can't watch it anymore. This is yours to keep forever, these 10-video Trading Floor Edges course. Usually priced at close to $1,000. We're discounting it down to $19. But remember, this is for a very, very limited time only. So I would, if you're, $19, if you're really serious about taking your trading to the next level, I would seriously take advantage of this before it goes back up to $1,000. You can't even go out to breakfast, sometimes even by yourself, for less than $20, $25. But for $19, you're getting nearly 5 decades of information, tips, techniques that I've accumulated in my nearly 5 decades of trading. But we're going to take it up a notch. We're going to actually add an extra bonus. So on top of that, along with your purchase of the Trading Edges course, we will include a 50% discount on any other product we sell. So anything else, any other trading strategy, any other indicator, any other technique, the platform, anything, you will get 50% off. And this is for a limited time as well. So you're not only going to get that great discount of $19 only for the Trading Edges course. You'll also get 50% off on anything else that's available that you can help your trading on the website. Okay, this is a great promotion, great way to get to know us, and you can't beat these prices. You owe it to yourself to take your trading to the next level. As I said before, we're going to conclude this year in just about a month's time, all right? Most traders, myself included, when I first started out, you begin the year in January with all these hopes and dreams about where you want to be at the end of the year. And you have all these hopes and dreams and goals that, well, I just want to make some extra money to go on that dream trip, or I'd like to have some extra income, a second income source. Or maybe you want to have that new gift car, or maybe that addition to your home. And most traders, by the first 2 or 3 months, realize there's no way they're going to realize that goal. Okay, start out 2025 in the right direction. For only $19, I really feel that you can take your trading to the next level and take charge of your own trading. Okay, you can't beat that price, and you owe it to yourself to take charge of your trading and to take your trading to the next level. Here's how to take advantage of this great offer. Contact my sister site, which is Pro Trader Strategies. They're in charge of all the pricing and all the discounts and tech support. You can call them directly at area code 310-598-6677. They have trading consultants manning the phones right now. They'll be more than happy to either answer your questions or take your order over the phone. Now, that link you see at the very bottom is the link that will take you to the info page, and you can sign up on there online as well. It's not a live link, but I'm not sure if they're going to be posting, if David will post a live link in the chat box, but you can copy and paste that and go to a browser, and we'll take you there as well. So I'm going to leave this information up here. David, I don't know if you want to read the questions, or if you'd like me to read any questions, perhaps. I can do that if there. Someone said, I opened up the chat box. Says, is 3A included in the 10 video course? No, it's not. So that is something totally separate from the 10 video course. You're actually getting a lot more. Someone's saying, can you place that link in the chat box? I think they just did. So you can have that for you right now if you want. And remember, this price is for a limited time only, but there's absolutely no obligation if you'd like to talk to the trading consultants at Pro Trader Strategies. They're there to work with you. They're very flexible, and they'd be happy to give you more information about what else is offered with that 50% discount as well. Okay. Let me just see if there are any other questions here. I'm going to go to... Let's see, is strategy 3, can you place the link? Okay, there it is. One of the things most people ask, and I'm sure we're going to get this question, is they say, I haven't been trading that long, or I'm not really a technical type of trader. I've traded for years, but I don't really trade this way. What they'll say is, what if I have difficulty with this? Well, this is one of the best things, actually, with all of our methods. Everyone, every student, regardless if you have a $19 offer or a $5,000 course, it makes no difference. You all are students of mine, and everyone gets my private email address. So anytime you have a question, you don't hesitate to email me. It could be prior to the market opening, during market hours, after the close. It can be on the weekends. It makes no difference. I'll answer questions on the weekends. And it's the next best thing to having me sit next to you, because you can always correspond with me. We have students all around the world or all around the globe. So the point is, there's no way I can be sitting next to everybody, but this is the best next thing. And don't worry, this email does not go to an assistant of mine. It does not go to a tech support person or to a salesperson. It comes directly to me. So no one else will see your emails other than me. Okay. Someone's asking, how long is this available for? I believe that would be probably a better question for Pro Trader Strategies, since they are in charge of all the promotions and the discounts. I would at least say till this weekend. But I'm not sure. You may want to ask them. It may just be for a couple of days, and then that's it. So that's a better question for them. That's why we say always give them a call. Okay. And Dave just posted the email as well. If you'd like to email them, you can do that as well. Okay. Now I'm sure you're going to wonder what I use this for. I like to, because of my background, I was, a trader on the floor of the stock exchange, and we would get in and out of trades in a matter of minutes. Sometimes you hold a trade for less than 2 minutes, and then you get out and go back to the next one. So that's my background. So I like to intraday trade E-mini futures. It kind of fits with my nature. So I use this for day trading the E-mini futures. And when you get these really volatile markets, when you see it going straight down or straight up, strategy 3A works perfectly. It really works well. So if you're an intraday trader, this is great. Now, we also have students that are investors that look at weekly and even monthly bars only. You can still apply strategy 3A the exact same way. So it makes no difference, remember, what market or what time frame. The rules are the exact same, okay? Let me see if there are any more questions. I think that's just about it. I may have run a little early, but you have time to get set up for the next. If you have any questions later on, I know a lot of times I'll do presentations and they'll say, oh gosh, I forgot to ask that question. Do not hesitate. Contact Pro Trader Strategies. You can see that's their email right there, trading@protraderstrategies.com. I would suggest giving them a call. You'll get there a lot quicker and they can answer your question, or they can refer it to me and I'll get back to you. Give them a call at area code 310-598-6677, and someone will contact you or tell you to, what the answer is, or email me your question and I will contact you, okay? Well, I think that's about it. There are no further questions. I hope you learned something. My only real requirement is, remember, this is a great strategy, especially for these volatile markets, but please paper trade first. If you've been trading for a while, you'll have some type of idea where you want to place your stop. Let's say you place a stop below a pivot and your risk is maybe 2 points. Well, a simple way is just to, once you have a 2-point gain, you can either move your stop to unchanged, or maybe say, I'm going to make twice or double what my risk is. So maybe you want to get out at 4 points. There's lots of ways to trade this, okay? So remember, just apply common sense. And if you're interested in more information, take advantage of this great $19 special, okay? Okay, with that said, I want to thank you so much for attending the 2025 Profit Playbook webinar today. You have a lot more speakers, and I want to thank David and everyone involved for inviting me to speak. With that said, I guess I'll hand it back to you, David.
There was one more question that just came through.
Sure.
Do you have any specific day trading course?
We have a lot of courses, actually, and not specific, and we don't try to say one is better than the other, because we know that every trader has different ways of trading. I would say our go-to course, which is really one of our most consistent methods, is strategy number 4. So if someone's a day trader, and this is another method that I use personally, I would say if you want to contact Pro Trader Strategies, that would be the go-to course for day trading. I would say strategy number 4.
All right, sounds good. We have a few minutes left. Any other last-minute questions for Stephen? Or anyone?
Yeah, speak now or forever hold your mouse. But
Ricky
trust
says
me,
thank you.
there's so much information jam-packed in this $19 course. I would really highly recommend taking advantage of that low price, because I know that's for a very limited time only, probably the next couple of days only. So as I stated, you can't go out to breakfast sometimes for less than $25. And here you're getting 5 decades worth of information. It's taken me that long to accumulate.
Lee asks, is the video course online?
No, the video course, it's sent to you. A link is sent to you, and then you're able to watch it whenever you want on any type of platform you like, whenever you'd like. So it's yours to keep. The courses, the 10 videos.
All right, I think that's it. Thank you, Stephen.
Oh, you're more than welcome. Thanks to everyone attending today. Thank you so much, and I wish you all the best of luck. Thanks, David.